Jim, you said a moment ago that after that last print, which you were disappointed in, you now believe.
Yeah, I go back and forth with the company a lot, and I think they admit that they got it wrong. This is not the end. This is the beginning of the layoffs. They're still not really touching the labs. And while OPEX is indeed down, that does matter. The Reality Labs operating losses in 2023 will grow significantly year over year. You need to see that change before you can get as excited as the market is for that. Mm-hmm. That hasn't changed.
So this doesn't point necessarily to diminishing the overall spend for his long-term vision for the metaverse.
No, and that has to change. I mean, now he has to get the expenses in line with the revenues. Not unlike someone we're going to talk about soon, Disney. I mean, these people have to realize, the revenues have to cover the expenses.
Well, and we're going to talk Disney a lot. But, but Jim, I'd love to get your response. Towards the end of the letter, I noted one sentence from him. I believe we are deeply underestimated as a company today, Mr. Zuckerberg wrote towards the very end of the letter. Do you agree with that?
I think that the part that is, yes, and I'll tell you why. I think WhatsApp is $10 billion in sales.
In revenues. It's a $10 billion revenue potential.
Potential. And that's worth, you got to put some multiple on it because it's good business. And that's not included in the vast mosaic that is Instagram, that is Reels. Now, Reels, they're very excited about. Now, I'm not talking about TikTok being disqualified by the U.S. government, but I think the rest of the business is indeed undervalued. It is yet to be seen to me, Carl, that the metaverse, which I've been in, is undervalued. That's not at the expense that they're putting it, and not getting the kind of feedback from potential advertisers or people who want to be in the mall that it is right now worth being in the Meta Mall.
Right.
So that has to do with paying. I don't know how much you want to do the exercise yourself. I'd rather do it on Mirror. I'm a believer in Mirror, by the way, Dave. And I just feel like that part is too much of a question mark. But yeah, the rest of it's undervalued.
As for the broader cutback story, it does pair with, say, reporting we've done on CRM, cutting hundreds on Monday. Party City, 19%. Yeah. Redfin today, Zendesk, Citi Barclays on some IB stuff.
Redfin, the AI real estate, the AI loans. No. I mean, these things tended to not lend. None of these people, by the way, want to admit that artificial intelligence didn't work as well as people thought. They just want to say that the market, the macro environment. I don't see anyone who just says the AI didn't work. David, it's macro environment. I'm sick of that.
Right.
Okay? Why not just say, listen, it doesn't really lend itself to something that we thought it lended to. But that would mean that their businesses are existentially in crisis. No one wants to admit the existential crisis, that, frankly, the models don't work.
Everybody's also looking for more efficiency.
Yeah, definitely.
And, I just wonder how many of their employees are actually coming to the office every day. Maybe there's an ability to actually create some efficiency there.
Did you see the real estate efficiency note in Zuckerberg's?
Mm-hmm. Yes.
What do you think that means? Farley?
Yeah.
Is that Tom Farley or Jim?
No, the Farley post office or the building.
What do you think about New York as a
Herald
place
Square? Listen.
By the way, see the layoff package? Probably would have worked there just to get the layoff package.
The layoff package is good,
and that
right?
cost them a great deal. The layoff package was extensive.
16 weeks, and then two weeks for every year.
It was. I even go to the point to say it was bountiful. Now, no one wants to get laid off. No one wants. But I'm saying that I was. If you got, you get your time. You get. Yeah. If you work there for a couple of years.
It's quite generous, but again, we've got a lot of companies looking for efficiencies. They are laying people off. You've made this point many times. It's the center of this isn't Silicon Valley. I do think it's interesting to also just remember that many of these companies are also not having people come to the office that often, and you do wonder about productivity, which, by the way, we have seen in recent quarters declining.
Do you know that the orders for steel, of the structural steel for skyscrapers, are down badly? There's nothing in...
No big surprise there.
Well, I say there's nothing in the works.
Yeah, although, bigger picture here, I do start to wonder whether you're going to see, over time, a reversion to past practices. More people coming in because...
That's too hard to tell.
Because maybe it is a better way to do work.
There are sightings in Kauai of Zuckerberg. The Big Island. Actually, I have someone who lives next door to him, so that's actually factual. Maybe, maybe factual.
He's walking the beach.
No, he's working. Jesus.
Michael Dell's there.
No.
Benioff is there.
He's working like
Ellison's
18-hour
there.
days. He's working 18-hour days to fix the problems of the metaverse.
But
okay?
The problem is he's spending most of that time in the metaverse
well,
with his goggles on.
He's not spending his time in Reels. That's a fruitless thing to spend your time in. By the way,
before we wrap this up, move on to Disney. You indicated you expect more layoffs.
I think that, the overtime.
You do?
Yeah.
So this is not the end of it?
No, over time they got to get, maybe over the next year they've got to get the expenses in line with the revenues. They just have to. They know that.